Now shifting focus to the crypto market, 8 months ago, crypto was unstoppable. But the story, since hitting a record high, is a severe crash. The digital assets market needs a new narrative to rebuild and fast. In October last year, the total market value of cryptos touched an all-time high of $4.27 trillion. Now it sits near $2.1 trillion, wiped out by roughly half. That's an average bleed of over $8 billion every single day. And that is not normal correction, but a structural unwind. The trigger is institutional capital. US-Iran tensions triggered a broad risk-off move alongside a re-accelerating US inflation print. The resultant bets of a Federal Reserve rate hike has killed hopes of cheap money flowing back into risk assets. Stock markets, meanwhile, hit record highs above 7,568 on the S&P 500, pulling capital into AI and semiconductor stocks instead. Crypto lost the liquidity race to Silicon Valley's AI boom. Bitcoin ETFs, crypto's institutional lifeline since 2024, they flipped from buyers to sellers. A 10-day outflow streak in May that pulled out roughly $2.8 to $3.5 billion that was followed by a 13-day June streak draining another $4.3 billion. That is the longest redemption run since the category launched. Recovery has leaned almost entirely on BlackRock's IBIT, the only fund consistently pulling money back in. That suggests a dangerous narrow base for an industry which sold itself on broad institutional adoption. Corporate treasuries are wobbling too. Strategy, the largest corporate Bitcoin holder, sold Bitcoin for the first time in this cycle. While that is symbolic, more than material, it cracked the diamond hands forever. That narrative that powered 2024's rally. The extreme fear reading on crypto sentiment goddess confirms the mood as well. The market currently is not dip buying but de-risking. Crypto's last cycle ran on 3 stories: halving scarcity, ETF adoption, and institutional legitimacy. All 3 are now priced in and none are new. Until a fresh catalyst, such as a real-world asset tokenization, stablecoin legislation, or AI token convergence, that gives traders a reason to re-enter, the $2 trillion sell-off may not be the flaw. It may just be the next stop down.